Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. So the Nasdaq has had this sort of really nice downward trend. We didn't really get to a level anywhere here, and we had a rejection on it. Okay, now we had quite a big selling day yesterday, and then today we've had the buying power again. So for me, with the Nasdaq, it looks like it's coming back up to this trend line here, or up to this ceiling. And once it gets there, in my opinion, we'll have a little bit of downward pressure at that point. We'll have a little bit of downward pressure. There's more sellers than buyers in the market here. But let's see, I'd like to see this just moving sideways for a while. I'd like to see this move sideways for a couple of months. Forget about the upside, get the sideways momentum going, and then see what happens from there. But at the present moment, I would expect that to hit that sort of ceiling there and then come back down. And the problem is at that point, we do have a couple of soft levels. We have this one with 1, 2, 3, 4 touches, 5 touches. We have the trend line, 1, 2, 3 would be the 4th touch. But then we also have this sort of horizontal ceiling, so 1, 2, 3 touches as well. So we're in that sort of area where these things can happen. But once it pops up to this area, we'd expect that to sort of drop down again. The S&P 500. Now the S&P got to that level there and asked the question whether this was a point where we could actually short the market. Now, anyone who put that short in, it never got triggered in. So anyone who put that in there never got triggered in, which means that trade didn't cost you any money, which is pretty good. That's exactly what we want. Then we want our winners to win, but then when we're wrong, we want it to not get triggered in. So that was pretty cool there. With the S&P, this seems to be the level here that we're looking to go back to. 1, 2, 3, 4, 5, 6, 7 touches. So that looks like the level it's going to come back to at that particular point. Now, the S&P level seems much stronger than the Nasdaq. So that is something we will have to just sit and wait and see what happens on that. But we would expect that to pop back up into this area and then sort of take off. We do have some sort of a trend line there, but again, it's not as good as the Nasdaq. I could actually manipulate that and make it work at that particular point, but again, it's not as good as the Nasdaq. We'll go into the Dow. So the Dow had a little small level there, 1, 2, 3. And that would have been the one that I was more confident of dropping than the other two. Why? Because the level was just better. But again, same as the S&P, it didn't trigger us in, which is probably that's exactly what we're looking to do. So for me, the next short would be at this particular level here. So 1, 2, 3, 4 touches back at this level here. So the 33164 level, that point. Now, there's sort of 2 ways of trading that. If you're still of the mind that this has loads of downside, then you can put a limit order in at that level. Now, with the limit order at that level, you want to get triggered in before it hits the level and then come back down. If you're someone who is a little bit more cautious, like myself, you will have to wait till the bar finishes and hope it's not a big, huge selling bar like this one. So see this big red bar here, that's exactly what you don't want. And that's what's happening when we get to these levels at each time. So what we're looking for is a nice small bar there. And if it gets a nice small bar, perfect, that's what we're looking to do at that particular point. German DAX. So the German is back at our level. So we've had this 1, 2, 3, 4, 5, 6, 7, and now we're on the 8th touch. Is that trade valid there? So entry below that bar, stop loss above it. Now, bearing in mind, I'm assuming that this market is finished. Now, this market is not finished. It'll be finished, what, about 6 o'clock today, or was it 3:30? And it finishes, so that's when that bar will finish. So I'm assuming that that bar is finished now. So don't take it as gospel that that bar is going to finish like that. It could finish as a high test. It could continue and make a double top here. Okay, but just assuming the world is all great and this is how the bar is finished. Is that a good position to take short? Yes or no. Answers on a postcard there. Okay, so I want everyone to let me know whether this is a yes or a no. Jan says yes. Shane says yes. Audra, yes. Anyone else? Now, a couple of things to be aware of is this may well go up to a double top. It may go up to a double top, or this may end up a high test bar. Okay, so they're the two sort of scenarios that we have now in our head at the moment, that this could be a double top, come up to here, hit its head, and then we'd expect a short again. But also at the present moment is that bar is halfway through. We may get a sell-off throughout the day, which means then that the sellers will come in. Now, at the present moment, if that bar finishes like that, we have a trade to nothing at this particular point. And what I mean to a trade to nothing is the chance of us getting triggered in on that bar is quite slim. So if we look at this position here, see the big selling bar, that has to happen for us to get triggered in here. So we have to open the bar here and market has to change. So if that happens, we're in the market, brilliant. Then because of the size of this bar, we're expecting the whole market has changed to the downside. There's more sellers in the market. But at this particular point, we have more buyers at this moment. So which means then we're expecting buyers to continue going up. But if the buyers bail at this particular point, the sellers will take control and we will be looking to take that trade there short. So in this particular one is 1.7. So 3 sevens is 21. So 5.1. Okay, so there's where the take profit would be. See the bottom of that there. Is that a safe place for our take profit? Let's have a look across here. So we've had 1, 2, 3, 4, 5, 6 touches there on that. So would that be a safe place down here underneath that green shaded area? Would that be a safe place for our take profit on this particular trade? Yes or no? What do you guys think? Yes or no? Well, there's a couple of arguments here. There's a couple of arguments. You could say to me that yes, it is, because we're making lower lows and we seem to have this sort of little channel going on here. And absolutely, it should make a lower low. But as someone who's been trading 10 years, once you have a level like that there, there's no need to be trying to take that extra 0.5% or 0.75% out of that market. See this where the open and the close of this bar? I'm going to edit this up and bring it back up to there, which means then now we would have 2.5 to 1 on this particular trade rather than a 3 to 1. Now, if I'm getting a 2.5 to 1 out of this trade, I'm quite happy. I'm not that greedy. But again, once it gets to that point, what you could do is par close a position, move your stop loss inside your break even, and then pull your take profit out of the way and see where it runs. Because this could very easily run down to this area here. But the overall momentum is down. We'd expect this to continue going down. unless there's some sort of news that comes out in Europe about the war, about what's going on, so on and so forth, okay? French CAC. The French CAC is nowhere near as good a setup as the German DAX. It's slowly sort of getting there. Are we ignoring that one there, that bar? Can we ignore that bar? Not really. We have to sort of leave that there as well. So is there a trade there? Yes, there is. If I was looking to take one out of two of them, I'd be looking to take the German DAX before I would take this one here. About there, entry stop loss. So this is 1.4. 4.2 out there. Okay, so that would be our take profit on that one. Again, we're down at the very bottom here again if we're getting that trade. So I'll probably have my take profit slightly inside that and then let it run from there. UK 100. Now, this is probably the worst of them all. Why? Because we don't actually have a downtrend on this. We could say here that the highs are getting lower and the lows are getting lower. So this is just, we only have this since April. Whereas if you look at the German DAX, the French CAC, we have this since November. Okay, so we have this downward trend since November, whereas on the UK 100, we only have it from April. So we only have it for the last couple of months. So this one would be probably the least confidence of dropping. So are we looking at this trend line here? Are we looking at this as something that's rock solid? No. Again, German DAX is a much better trade than the French CAC, and then the UK 100 would be the worst of the European stocks. China. Again, let's have a quick look. We get that anomaly bar. That's just the data. Okay, so we do have a potential short on this as well. Entry below there. We wanted that to go back, and that's exactly what it did. So we're now wanting that to there, pop down to the downside. Now again, how much downside are we looking at? And for this one, I hit at 3 to 1. We're only looking for about 9, about there. So we're only looking for a little bit of momentum to the downside. Now, yes, it has to make lower lows and it has to take out that low. So we have to be aware of that as well. When we're looking at this, we have this low here. And that has to be taken out for us to hit our take profit on this. But again, unlike most of them, this is a whole of 2012. So February 2021, this has been in a downward trend. So unlike the European stocks, this has been in a downtrend for a year and a half. Now, oil, anyone that took oil long there, well done. It is not a trade that I'd be looking at. There is no momentum there. There's no sort of trend there. It's not something I'd be looking at. If you took it off that trend line there, you're a better trader than I am. It's not something I'll be looking at. Potentially jump down to the 4 hour. There's a pullback here. See this pullback here? That could be something that we could have jumped in on the 4 hour. And there was that nice pullback, 1, 2, 3 bars back here. Had a nice little low test. Would we have taken it there? Support and resistance off that there? Potentially, but it wouldn't have been something I was taking. Tyson, I know you took this short. I'm assuming you have moved your take profit down and jumped out of this trade, I'm assuming. So you're shorting and longing, okay? So you're gearing. Just make sure if this continues going long that you're pulling the plug on the short, or you close the short. Yeah, one of the things about gearing is that you have to be able to pull the plug on the one that's losing. So if you're gearing, make sure you pull the plug on which one is good, which one's wrong. Now, what is gearing? Gearing is when you buy a trade and sell a trade on the same asset. Now, a lot of people talk about, oh, hedge. That's not hedging. That's called gearing. Hedging is when you're talking about two different assets and you're buying one and selling one to counteract each other. So hedging would be buying US dollar and buying gold. And why that is hedging? Because the two of them usually go in opposite directions. So which means if gold gets stronger, US dollar gets weaker. So that's why you'd be buying both of them, and that would be hedging. Whereas you're on the boat on the same asset, it's called gearing. Okay, cool. So we looked at this head and shoulders pattern. So there was the left shoulder, the head, and there was the right shoulder we're looking at. And again, love it when we do the likes of this and it doesn't set up. It didn't trigger us in. Okay, so we didn't get triggered in that trade, so remove that. Anyone who took this trade that's still running. Let's have a look at this one. That's over an 8-to-1. What, 8 3/4 to 1. Anyone that took it, if you still have that open, well done. Well done. So that's the indices there, sort of gone through. There's not a whole lot we can sort of look on the likes of that. Sort of stocks. Again, there's not a whole lot we'd be looking at the minute with stocks. If you're going to trade stocks, there are a couple of shorts on at the minute, but nothing major for us. So I'm going to move over on to crypto for a little while. Have a little look at Ethereum. So Ethereum has now come back down to this level here. So 1, 2, 3, 4, 5 touches. So it's hit it nicely. So the question, I suppose, there is there value in buying Ethereum at 1,716? Is there value at that level in buying that again? So then the question is how many people bought it just above it then? Because if that's the level, we can put a limit order just above 1,790. And then depending on the spread of your broker, whether you actually got triggered in or not. Eduardo, well done. Good shout. Well done. Good shout. But that's the idea then. We're looking at those areas. We're looking at them to potentially jump in and actually look at these long term, because anyone in the UK, you can't trade this. So you can't short the market at the moment. Anyone who is outside the UK, you can short these. Absolutely, I'll be shorting them if I could. But anyone in the UK, you can't. So the idea then is we start looking to dollar cost average in, but we're dollar cost averaging in at key levels. We're not dollar cost averaging in at levels that don't exist. We're just randomly buying them. Buy them at nice levels. Okay, we're looking at sort of key areas that we're looking to jump in on these. Now, for me, the next key area underneath this, because this could very well drop further. And because the market is bearish, I'd expect it to drop further. Is there, for me, is the next level. Underneath that is 1,335. Okay, so would expect those to potentially continue going down. But I could be wrong. I've often been wrong. Anyone who's been following my trades, I have about a 53% success rate with my trades. So which means then that I'm wrong 50% of the time. But the idea is my wins are bigger than my losses. And that's why we have the 3-to-1 risk to reward. So am I happy to buy some at this point? Yes, sticking an order just above it. Am I happy to buy a little bit again at this point? Yes, sticking an order just above it. And this is not just on Ethereum. This is across all crypto, every one of them. Again, we can see I have the levels, and then the greens are my order levels. Okay, so I have another order here at 21,000. So if it drops down, get triggered in. I took a trade here. What was it, about 31,000 live on the webinar last Tuesday with you guys? Absolutely. Why? Because I'm happy to take a position there. That now, do I think it'll go lower? Absolutely. I do not think for 1 second, and this is where it's going to hold. And then once it breaks this, we have to go up onto the weekly chart, find the rest of the levels. And that there is the next one. Who's ready for 12,000? Who's ready for 12,000, guys? Of course. 12,000 on 12,000. We're not into conceding out, Tyson. Cannot wait. But again, the idea is to have these things or have these plans in place. Okay, have these plans in place to be getting in. Now, as you know, I only ever get in on 1% of my account. So I've got in there, I get in there, and I will have an order. If it gets down to 20,000, I will have an order at 12.5. Well, actually, probably 13. I'll have an order just above that at 12.6 level. The idea then is that once the market turns, I have dollar cost averaged in at key levels and slowly bring my average down. So this one here at 52 doesn't look very nice now. At the time, I was looking at 43. I was like, oh, lovely. Then I went down to 30. I was like, yes, lovely. I got some really nice positions here now on 30. It goes down to 20. I'm like, oh yeah, brilliant. My 30 position doesn't look great now. It goes down to 12. And the idea then is we'd expect this to take off again. We fully expect this to take off again, but the problem is no one really knows when. We need it to be incorporated into more companies. We need it to be the use cases to be brought in more. So with what's after happening, this is a big negative on the likes of crypto. This is one of the big negatives of companies investing in crypto, is that we have seen in this here, we have seen a 56% drop on this particular asset in the space of 5 months. And that's a problem for investors who are looking at this long term. And this is Bitcoin. So if we go to some of the altcoins, those losses are even more, even bigger. So this will halt a little bit. This will halt the progress of that. Or you could look at the other side of it, that this is where more people are now looking at it because it's cheaper, it's easier to use. They can see it going to 64,000 again, which means then there's loads of upside. There's 100% upside for it to get back to where it was. You could argue that point as well. But the idea here is that we just make sure we're in a key points. This is not a short-term trade. We're not looking to hold on to this short-term. We're looking at this. We could end up having to hold on to this and see red for the next 6 months before we start seeing some profit. It might be a year. How many people bought it in 2018? And then in 2018, bought it somewhere around here. And then in 2021, they got back to profit. Okay, so that was 3 years people sat through all this before it had another run and took off. Okay, so we could see that all over again. 88. Similarly with this. I love it when people tell me that cryptocurrency doesn't follow technical analysis. Look at this for a rejection here. Come down to this level, 0.46449. Did anyone get triggered in on that trade? So that's an order that we had in place. Question is why not? Luna reopens today. Could you think it is a catalyst for cryptos? Well, is it going to be good or is it going to be bad for it? That's the problem. It's hard to conceive them going so low. Well, it's actually not. It comes down to the perceived value. And it comes down to supply and demand. So people are only jumping in on this. Why? Because they see it going up. They see the price going up. They see that there's easy money to be made. But the problem is that people never, ever, ever worry about the downside. It's non-existent in traders' psyche. Oh yeah, it's going up, Yeah, I'm making money. You're telling friends, you're telling everyone, absolutely anyone who will listen, you're telling. But the thing is that once it goes back down to these levels, that's when we're looking to buy up. One of the best pieces of advice you'll ever hear from trading is when everyone is fearful, be greedy, and when everyone's being greedy, be fearful. And that's a prime example of it here. Look at this. Look at these moves here. Everyone is jumping in at, myself included. Did I jump out? No, held on to it. Then took another position here at this level. And then took another position there at that level. So the idea is make sure you have your levels. Make sure you know where you're looking to get in. You're not jumping in on emotion. You're jumping in logic. You're jumping in, making your trading very logical. Because I'm pretty sure a lot of you guys are looking at this going, yeah, that makes sense. It makes sense. It makes sense. How many people have followed those sort of the rules, the sort of structure of that there? Not many. Not many. These are back to daily. So Solana, pretty good example of that. Pretty good example of that. How many people are in Solana, jumped in somewhere around the highs up here? Why? Because everyone else was jumping in on it. But for me, that's the next level it's to come back to, up there. Now that's 19,000. If that comes back to 19,000, and then it goes back up to the high here, that's 1,143% return on investment. But the question is will that go back up there? Or was it one of these that just was pure hype? You know, we have to be looking at this with a logical head. Now, I don't know the answers to them, but what I'm going to do is if I'm looking to invest in it, I'm looking to invest in here at these areas, 24,900. So if it comes down and touches it, I'm in the market. I'm happy to be in the market. After this, where's the next level? About there. Change the thickness. About there. And there. Now, will it get down that far? I don't know. But the idea is that you have a plan in place that if it does, you have these in place, you have structures in place, you have things set up that if it hits there, you're buying them. It's that I trade cryptos. Do I trade them? No, I invest in them. So I have these levels lined out. I have my orders already in place. So then it really makes no difference to me. How many times did we see on ADA hitting that 1.1 level and it hit it and I didn't get triggered in by the spread and you're all laughing at me. Then it comes down again, comes down, hits it. What was it? 3 times it didn't hit it and I didn't get triggered in. Well, I'm in it long term. I'm in it now, am I? Because it's now much lower. And we're all in the same boat because no one got in and then jumped out. People jump in and hold on to it long term. So the idea is make sure you're buying these cryptocurrencies, and the same even with stocks, at levels that we're happy to hold on to them. You're buying stuff that has use cases. You're buying things that you think that will continue and go through the test of time. So we have Matic, which was the one that was holding its sort of own and still trending quite nicely, has now sort of fell off the cliff from the beginning of the year. And it's now the very same as every other crypto out there at the moment. So I'll pop that down there. And there's one there below it. Pop that down, bring that across as well. Just literally across all of them. It doesn't matter which one you're looking to trade. They all have these levels. They all have them all in place. But Tron, anyone who's trading Tron, an order at 0.05056. So if it pops back down and hits that, well, we're in the market. We're in an area where we're happy with it. I know some of you guys are in Ape. For the love of God, I have no idea why. Unless you can tell me that there's some use case there that it's absolutely jumping at us here. For me, there's nothing there I can see. What's the ticket on TradingView for Ape? Does anyone know? It's market cap of Ape. We'll go Ape USD just to, again, there's nothing there. Again, there's nothing there either. So no, it's not something that I would be looking to trade. Has anyone got anything they want me to go through? If not, I'll go on to the precious metals, gold, silver, like that. Luna. One hell of a drop, wasn't it? Aviva. Assuming it's this one, Viva.hell. What is that? Is that earnings? I'm assuming. No, it wasn't earnings. It's a dividend. It's a jump on the dividend. It's a pretty big negative jump on the dividend. So what would you like to know about it? Is it worth an investment? I do not know. We do have a horizontal level there. 1, 2, 3, 4 touches. Let me have a quick look. Trading view. Earnings have been negative. Earnings in negative. 3 positive. Negative. 2 positive. Negative. Looking at this, no. On the earnings alone, nope, absolutely not. Not a good investment on earnings alone. If I look at the chart, we are pretty much in a downward trend. Okay, and we're getting close to that high. So in a market where the stocks are dropping, this is not something that I would be looking to invest in. But what we have seen is this has been trending up quite nicely. So what I'll be doing is having a look over this last year or last 2 years, why this has been going up, why it's trending up. It has had 1, 2, 3 good earnings in a row. So in the pandemic, this had 3 good earnings in a row. What was it doing in that year that it had good earnings? And then look, we've had 2 bad earnings since the sort of pandemic, since the release of everyone. So I'll be looking to see what's going on there. And is this going to continue? And find out what is for me, the big one here is find out what is the expected earnings. What are we expecting to happen on this quarter? Is it expected to be good? Is it expected to be down? So there are all the things I'll be looking into this stock before I'll be looking to take that. Okay, so let's have a look at wheat. So again, as we know, Russia and Ukraine are the 2 biggest providers of wheat. It's been pretty flat. And all of a sudden, over the last 2 or 3 days, it has taken off. It's not something we could have traded. It's not something that gave us sort of an indication. So for me, it's not. Now I'll be sort of staying away from it. Silver has been the gift that just keeps on giving to us down to this area. We've had this huge trend here on the likes of silver dropping down. The daily chart we couldn't have taken. Why? Because the momentum was just too strong. We would have had to drop down to the 4-hour. Trade there, a winner. Trade there, a winner. Trade here, also a winner. Now, if you took this one here, you were up about 1.5%, and you're now slightly down. So you're down 0.5% at the moment. So let's have a quick look. Should we be still holding that trade? Has the momentum changed? or should we be jumping out of that trade if we have that? Now, at the moment, we have 1, 2, 3. We have a pretty decent level on the likes of silver. It's sort of popped back up, and today's bar will give us a huge indication. So just say today's bar finishes like that. Just say today's bar finishes like that. Is that trade still valid, or should we be jumping out of that trade? In your opinion, guys, should we be jumping out of that trade, or is that trade still valid? Okay, so if that stays like that, yes, this trade is still valid. Absolutely. Or if you've missed this trade, you could potentially take one there. Now, this is a little aggressive. Why? Because the body of the candle is above this level. Now, the problem with levels is that they can be sort of misconstrued. They can be sort of areas, zones. So as long as we're in around this, or as long as we're in around this horizontal level, the big thing here is the wick. So see the wick on the top of this? That's the big thing for us here. So it's told us that the buyers try to push it up and the sellers to push it down. We'd like the sellers to come in a little bit further for the end of the day. Ideally, we'd like to see this bar turning red, which means that there'll be more sellers in the market here, which would give us a far stronger level here. But if that finished up here and it was green, they'd be telling us that there's far more buyers in the market than sellers, and we'd be looking to sort of jump out of this market. We've had 3 buying bars in a row. It tells us that there's more buyers in here, and we're probably going to incur a full loss if we hold on to that trade. So that's something to bear in mind. Now, also before I take that trade sort of into consideration, we will always go and have a look at gold and have a look at US dollar as well when we're taking these trades into consideration. One, because silver and gold sort of follow each other, and then gold and US dollar generally do the opposite to each other. Okay, so if we look at gold, gold has sort of come back into this level. So 1, 2, 3, 4. We're back now at this 5th touch. Okay, anyone who took this trade here, well done. Went down to a full winner. I'll just leave that to one side there. So if we look at this here, there is a potential short on this. So entry there, stop loss above. So that is 1%. Out there. Okay. So is that trade there valid? Is that a better setup than silver? We wanted it to come back to this level, and it's done exactly what we expected and wanted. Could argue that we're back now in the area where this trend line is touching. Bounce, bounce, bounce. And we're now back in that area. So is this trade here better than silver? Is that trade valid? And the answer to all them is yes, it is. Is this the best trade in the world? No, it's not, because we only have 2 bar of a pullback here. We'd like to see 3 bars. We'd like to see this one, 1, 2, 3, a substantial pullback. We only have 2 bars here. So is it perfect? No, not at all. Not at all. But are we back at a level? Yes. Is there a trend line here? Yes. Is there a small bar? Yes. Is there more sellers in the market here than buyers? Yes. So there's a lot of more ticks in the yes box than the no box in this particular trade here. Let's have a quick look at dollar. That's not the DIX either. Anyone know the code for the Dixie? I thought it was DXY. Pretty sure that's not it. So the equivalent of DXY is Euro USD, because the dollar index is 60% weighted. 60% weighted in the dollar index. So we still have dollar getting stronger than euro, but we've had over the last 3 days, we've had a little bit of euro or dollar weakness. So if we look across all the markets, dollar weakness, dollar weakness, dollar weakness, dollar weakness, dollar weakness, dollar weakness, dollar weakness. So the question then is that if the dollar is getting weaker, do we think those trades on gold and silver are valid? Okay. So the general consensus is gold and silver is not a trade at the minute. Why? Because dollar is getting weaker. So we have to find areas where dollar is going to get strength. So where we have horizontal support and resistance in these areas, and it doesn't look like it has any of them. So USD CHF is the only one that's getting near a level. They all don't seem to be anywhere near levels as of yet. So for them to turn around, I wouldn't expect them yet. I'd expect continue with a little bit of dollar weakness. The overall momentum is up on dollar, so we would expect dollar to continue at some point. Okay, everyone, it's been an absolute pleasure. Thank you very much. Hope you have a lovely evening, and save that link because that is the same link every week. Thanks very much, everyone. Have a lovely evening. Bye-bye.